Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is a Forex educational video, also a trading video. Hope you learned from it. I'm going to take a look at the New Zealand versus US dollar. Let me explain my idea. Most times when I post on ForexLive.com or do a video, I'll talk about two things. One, the risk defining level. That level is where risk can be defined and limited against a technical tool or a couple technical tools. And then I'll also talk about where the trade might be going. That's the reward. I'm most concerned about the risk, and but you also have to be concerned about the reward in most cases. If you're going to risk, I don't know, 10 pips on a trade and only make 5 pips as a reward, that's a trade you don't want to do. But there are times in the market where you get to a point where you know that this is really a key risk defining level for a currency pair, and it doesn't really matter what the reward might be on that trade. Why? Because the risk is so small. There's multiple reasons at this key level that if it's either going to work for you, in which case you're probably going to make more than you risk on the trade. And if it doesn't work for you, your risk is going to be really limited. Let me explain by looking at the New Zealand versus US dollar. This is an hourly chart for this currency pair. And the thing I want you to point out is I connected this high to this high right here to get this trend line. And this trend line cut across here at around the 70.35 level. Now, what's also at that level? Well, this green line. This green line represents what? The 200 bar moving average on the 4-hour chart. H4 moving average 200. That's a simple moving average. That's where it cuts across, right at that trend line. So I have two good reasons to expect that traders might lean against that level. Not just me, but other traders might lean against that level to define the risk and limit their risk. What is my risk on that trade? Oh, 5, 6, maybe 7 basis points at max on that trade. If it goes above those two levels, I probably just want to get out. It didn't work, but if it stays below, I have the potential to make a little more or more than what I risked. I like to say I risked a little to make more than a little, okay? Whether that's 7 pips or 14 pips or 21 pips, I don't know. But I'm only risking 5, 7 pips on the trade. So I don't have to make much when I risk a little. I can still make a multiple of what I risk fairly easily. And so this area is a key level, a level where I have multiple reasons to trade, where I expect to see sellers lean against that level. Now, there's only 2 reasons to trade at that level, but there may be more. And there actually is. If I take a look at the daily chart, and this is from a totally different perspective, from the perspective of a longer term trader. And if I were to look at this trend line connecting this low with this low, with this low right here. As you can see, we broke through that trend line, and what did? We saw the market move lower off of that break. And since that time, we've seen the market rebound, and that rebound came right up to the underside of that broken trend line right here. Guess where that level comes against? The 70.34 level. Moreover, if I were to go back to this point right here and draw a horizontal line against this swing low in November, that swing low in November also came in at the 70.34 level. So on the daily chart, we have the swing low off of the 70.34 level in November. We also have the underside of this broken trend line acting as resistance, a level where traders might lean against to define the risk and limit the risk, and hopefully see the market rotate back to the downside like so. And so when you combine things like what you see on the daily chart with what you see on the hourly chart, now you have not only 2 reasons, but 4 reasons to lean against that level, to risk your 5 pips and hope that you make 10, 15, 20 pips on that trade, a multiple of what you risked. And that's what a good trader does. If you like this video, give it a thumbs up. If you don't like it, we're a democracy, give it a thumbs down. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.